This is Tom Asprey with the Viper Alert Market Wrap video for the week ending October 28th. It was a very impressive week for the market, even though a couple of tech giants missed earnings and Meta plunged sharply. Most markets were higher. Let's take a look. A different way to look at performance here. You can see that the Dow Industrials were up 2.5%, 2.6% for the day on Friday, up 5% for the week, almost a leader. The transports also up 6%, whereas the S&P was only up 4%, and the Nasdaq 100 up 2%, and of course gold was lower. Utilities were strong. You go a little further out, you can see for the past 1 month that relative performance analysis of the Dow is really kicking in, up 10.7%. As it's been the strongest market. Now we look at a little different spin of this. We compare it to the S&P 500, and you can see not much change for the day. For the week, it was 1.77%. That's the DIA, then the SPX or the SPY. 1 month is at 5.8%, and 3 months, about the same. A little more dramatic. The 1 day it was not. The transports were not as strong. 3% better on a 5-day basis, a weekly basis, and you can see the Russell also beat out the was much stronger than the SPX. Nasdaq was lower, and gold was like 4.5% lower. So this gives you a relative way to look at things, which I think is important. And if you go into the 3 month, you can see that the Dow is still doing 5% better than the S&P. 6 months, 5%, 8%, 8.6% on a year-to-date basis. I think this is a very effective tool, and I'll be writing more about it later. I also use it as part of my ETF screening and stock screening process to drill down to find the best of both categories. The big surprise last week was the outperformance in the Dow and the strong action. You can see this is a weekly chart. We closed above the weekly Stark band. That was at 326 and change. We closed at 328.51. That doesn't happen very often. In fact, if you go back, I think the last time was in early 2018, and we closed above the weekly Stark band. So pretty amazing. The weekly Dow AD line has moved back above its moving average, and as one might expect, you can see that the relative performance is surging. We talked about that on a daily basis a couple weeks ago, and it's definitely played out. The key weekly resistance for the AD line here, and that's what we really need to overcome to signal that a major new uptrend is underway. This is a daily chart of the DIA. You can see it also exceeded its Stark band, getting into resistance near between 331 and the resistance from June in the 332, 333 area. The downtrend in the Dow AD line was broken a week ago Friday, and we haven't looked back since then. You can see this 5-day. We didn't make lower lows any of those days. Think it's pretty extended. It's quite a bit of ways above its 20-day EMA, so that's usually a sign that a pullback is likely in the next week. Weekly chart of the SPY shows you that the S&P 500 weekly AD line has moved above its moving average. That's a strong sign. The SPY has just reached its 20-day or 20-week rather EMA, which is declining. So it's getting up into the resistance between 388 and 400. This high here was 411.73. So those perma bears are probably using a stop above that level. The QQQ chart does not nearly look as strong. You can see we're still well below its 20-week EMA, about 10 points or so. And the AD line, though rising, is not overcome the moving average or the resistance here at line B. Looking at the daily analysis, even though the 50 has dropped below the 100 here, so I know at the start of the week, we've just rallied back up to the 100-day moving average. However, it's still declining. Typically, though, that the 20-day has turned up, so that's a good sign. Before either of these moving averages, can start rising, we're probably going to need some consolidation here. You can see the pivot at 374.60. May not get back. That's 15 points, but possibly get back, into close to that area, say 378 to 380. The S&P 500 AD line broken its short-term downtrend. That's what you need to see. Gap here is a bit wide, so typically that would see a pullback. Stocks only also has finally turned positive, and even the NYSE All, it's still lagging. You can see the distance is from its low. You compare that to the S&P, quite a bit weaker, and of course this represents the common stocks. It has marginally overcome its downtrend, this downtrend line E. The short-term AD numbers are getting a little extended. This is the NYSE Advanced Minus Decline Oscillator, a 5-day moving average. So it closed at plus 981. You can see this was plus 1140, plus 1180, and plus 940 back in early October. We got a setback from there. So that suggests that though it's painful to see prices keep moving away from you, it's not an environment to chase prices. One of the factors I've been worried about a month or so ago, we started talking about, was the weak action and the number of stocks making new highs. You can see that changed last week. The number of new highs on the NASDAQ surged above this resistance, but also supports the fact that this is what you see when you look at this indicator. The lower number of stocks making new lows is a positive sign. It means that at this low here, fewer stocks were contributing on the downside, which is what you want to see when a market is sold out. You can see we saw a similar divergence here in June that finally materialized into the July low. This action is confirmed by the NYSE numbers, so this is in green the number of NYSE new stocks making new highs. It got above this resistance. Next one's above 100, about 110 I think here. Also lower highs in the number of stocks making new lows. Of course, we've been focusing on the yield here. You can see that the yield on the 2-year note declined for most of the week. And you can see this in purple. This is the SPY. It's had a nice move up. Some signs the yields are trying to stabilize. Typically, even though you have this pretty strong divergence in the MACD that's consistent with the top, you would at least see a 2 or 3 bounce to the upside here, maybe a back above 4.50, up from 4.41 early in the week. That would coincide with a pullback in the SPY, but the MACDs do suggest a top is in place. We talked earlier about how important that was, at the July low and also at the August high in stock prices here, when we peaked up here and then yields started turning higher, and that pushed stocks lower. Of course, the action in the 10-year note yields similar. We drop back to the 20-period EMA, so you could see a move back up here to 4.16 to 4.20, and that popped the MACD back up towards its signal line, but that's about it. I continue to favor buying the pullbacks and picking your price levels, because it's never clear what's going to trigger something. I frankly expected to see more of a decline than just Thursday, but that doesn't mean that we're not going to see a further pullback in the week ahead. Those of you following the Viper Daily Alert Service and the 260 future signals had a much better week last week. We'd flip back to long a week ago Friday, and at an entry price at 37.46, and then we hit the targets at 37.68, 38.11, and just barely hit the one. This high here was 38.97.50, and and the target was 38.96 and change. Return to the short. The system flipped back to the short side on Thursday at 38.28. So if you still had long positions, the exit was above your entry price. Sharp drop in late trading. Got down to 37.83. Which was roughly a quick 45-point profit, and then we flipped back to the long side again on the morning of the 28th at like 5:20 a.m. and so we're on board for this last rally up to the upside. So far we've hit one of our targets at 38.97 with another one at 90.30. As I mentioned, when we first launched this service in the spring, we're continuing to make additions and advancements. So look for those in the next couple of weeks. This last week was fairly good, but we're going to give you some suggestions on position sizing and how to use on the long position from Friday the 21st, 22 points, 65 points, 150 points at that 380.96, and then if you still had anything long, you had 82 points. We went short, took 45 points here, and gave up 14.8 points. We were stopped out, and currently we're long from 38.43. We're trading about 39.23, and we hit that first target. And let's look back at the chart. You can see the volume has returned back to positive, as has the stochastic confirmer, and it's not yet in overbought territory. You can see we went into the sell signal on Thursday. The stochastic confirmer had topped out, and the volume had turned negative. The daily chart still looks strong. We're long back, from that rally over a week ago. Withstood this little pullback here. You can see that the dynamic stop is working quite well. We really didn't come close to it. We're almost up to the first target at 39.49, 40.067. A lot of people are watching the 4,000 there. 43.02. If we get up that hard, I don't think there'll be many bears left. Longer term volume analysis is still negative. It's below this moving average, but the short term, has been positive and still is. Stochastic confirmer has just flipped to negative. For those of you who are not subscribers to the Viper Daily Alert Service, but would like to give it a try, we're doing a special year-end now for 2 months. You sign up by November 1st for just $100, and you get service until January 6th. You get the videos plus the daily intraday reports on that, and the long-term performance has been quite good, and we'll be publishing that hopefully by next weekend. So if you have any questions, you can see this link, and it'll take you to sign up at PayPal. And of course, you can find information on our other services at theviperreport.com. The homepage here has a link for the Viper ETF, Viper Hot Stocks Report, as well as our mentoring. So if you want information on our other services, the Viper ETF or the Viper Hot Stocks Report, just go to theviperreport.com. You can click on these links, and it'll take you to the sign-up page. Just $34.95 a month for each service.